My name's Nate Berneking. I am the new Director of Finance and Administrative Ministries for the Missouri Conference. And back a couple of weeks ago, we had a Benefits Roadshow that some of you may have heard about, which presentations were given on two topics in particular, on our pension changes as well as healthcare reform. We were fortunate to be able to video one of those presentations, and the pension presentation came out great, and we're going to have that up on our website. However, the healthcare reform, we had some technical difficulties during that presentation, and so I'm here joining you in a different space, but giving basically the same thing. I ask your forgiveness about this. I do have some notes, but the notes will be helpful because if you see me looking down, they'll be helpful to me, but they will also help you follow along. We have a PowerPoint presentation available on the website. You'll be able to follow along with my PowerPoint and know exactly where you're going. Before I begin talking about healthcare, I made sure during each of the presentations on the Roadshow to talk just a little bit in following up to Mark Connor's presentation on pension changes to make sure that clergy understood exactly what they needed to do. Going forward, beginning in 2014, because of changes from the General Conference, clergy are going to have a matching program, essentially. You will need, in order to preserve the same contribution you've always received to your CRSP DC, that's defined contribution plan, to preserve your contribution that you've always received from your local church, you will need to make sure that you are contributing at least 1% to the United Methodist Personal Investment Plan. That may sound a little complicated. I hope you have heard those terms before, but if you haven't, please feel free to call our office. You can talk to Trudy McManus or to myself. You can also get information from your district office by contacting your district administrative assistant. The 1% to your personal investment plan, that needs to be recorded on your pastoral support form on either lines 3 or line 6, depending if you're giving a before-after tax contribution. And you'll also need to fill out a contribution agreement with your district office that will also come to the annual conference. Well, with that kind of out of the way, I am going to move into healthcare. I encourage you to contact us with questions at the conference office. The reason I wanted to talk about healthcare reform is that it is a topic of high controversy, and you may have heard about it in the news. You may be thoroughly confused about where things are going, how that's going to affect you. The good news is it's not going to affect you significantly for 2014. In fact, we're going to stay exactly with what we've been doing as clergy here in the Missouri Annual Conference for 2014 and possibly even for 2015. But changes are coming, and you need to be aware of that. I also hope to alleviate some anxiety that exists in the greater culture here in our churches. You're certainly going to have questions from your church leadership about healthcare reform, and maybe even from laity just with general questions who are in your local churches. So I wanted to really answer the question, what's happening with healthcare reform? And then as a second question to answer, what do we need to do about it as pastors and also in our local churches? Well, let's take the first question first. What's happening with healthcare reform? Way back in 2010, March 23rd of 2010, the President signed 2 pieces of legislation into law. The legislation, they were called 2 bills. One was called the Patient Protection and Affordable Care Act, and the other one was called the Healthcare and Education Affordability Reconciliation Act. The one you really need to be concerned about is the first one. It's also known as the ACA, or the Affordable Care Act. You'll hear that in the media quite a bit. And what did those 2 laws do? Well, they did a lot of things, and they did it intended to roll in over time. They're actually very slow to be enacted, and the administration has actually delayed significant portions of those laws. The first changes took effect immediately in 2010, and some of those we have already been living with for 3 years. More changes are coming. In fact, the bulk of the changes are coming in 2014, beginning on January 1. And we can look forward to continued changes over the course of time all the way to 2018. So the law will actually take 8 years to fully take effect. The law first, and not immediately, but for the most part immediately, the law first imposed limits on insurance companies. It's, in a sentence, the law imposed limits on insurance company limits. Some of you all have maybe even experienced this, and you are well familiar with some of what insurance companies do. Take, for example, insurance companies in the past have had lifetime limits on healthcare benefits. Sometimes that means if a person develops a terribly chronic condition and they are hospitalized over the course of months or years, what that can mean is that when you hit the lifetime limit, the insurance company will no longer pay out any more benefits, and the costs are shifted to you as the patient. Well, beginning this year, that is no longer going to be the case. The law, the Affordable Care Act, limits and actually prohibits lifetime limits on any health insurance policy. So going forward, you'll no longer hit a lifetime limit, and your insurance company will have to continue to provide benefits over the course of your treatment. Insurance companies also tend to limit annual payouts of benefits. Now, the annual limits imposed by insurance companies are going to stick around, but a floor has been established that makes those limits a lot more reasonable than they may have been in the past. You can tell together what's happening here is by limiting these limits, insurance companies are not being allowed to have too high of out-of-pocket costs for patients. This is generally a really good thing, and I know that the controversy surrounding healthcare reform, sometimes it can get a little bit out of hand, and what you really need to understand is that healthcare reform is not nearly as bad as what one party would have you believe. That said, it's not nearly as great as what the other one might have you believe. You just need to be very cautious in listening to the media and to the politicians as they go through and explain things. These first two limits are actually very good and will actually be able to help our clergy families going forward, because lots of our families don't use our health insurance. They go somewhere else, and the policies that they'll be getting in the future will no longer have these lifetime limits or unreasonable annual limits imposed upon them. The next one may affect you as well. Many of you know that in the past, you've been able to insure your children, your dependents, assuming that they were students until they were 25. However, if they weren't students, then they were not allowed to be on your coverage after they graduated from high school or about age 18. Well, going forward, beginning this year, you will be able to insure your children, your dependents, until they are through age 25, regardless of their status. In fact, you're going to be able to cover them under your policy even if they could find coverage elsewhere. So a 22-year-old or 23-year-old who graduates from college and gets a job, and that employer offers a health care plan for them, assuming it's not a mandatory plan, they can actually cost compare the plan that you can offer them with the one that their employer is offering them, and they can choose. You'll be able to continue to cover your kids until they're age 26, no matter what their status is, even if they get married. You'll still be able to do that. The next one was very positive as well, and this one especially for some of our clergy families may have an effect. In the past, insurance companies could refuse coverage or limit coverage based on what they call pre-existing conditions. So if you had a chronic condition and you had health insurance with one employer and you suddenly lost your job or left that employer and your coverage ended after a time, going to get coverage at another insurer was very difficult because they would not insure you based on your pre-existing condition. Beginning in 2014, insurance companies are no longer allowed to do that for anyone. Immediately once the law was signed into effect, the pre-existing condition limit was eliminated for children up to age 19. But going forward in 2014, insurance companies can no longer say no to you because of a pre-existing condition. So you can hear some of these changes are incredibly positive and will be very helpful to a lot of our clergy families. Another thing that the Affordable Care Act did was it changed the way insurance companies could calculate premiums. Insurance companies are no longer allowed to raise premiums based on pre-existing conditions or based on the status of your health. Things like weight or high blood pressure, premiums now are held and more standardized across the board. A couple of exceptions to that. Health insurance companies still can charge more premium for older folks who need insurance. However, there's a limit on that. They can only charge up to 3 times as much as they charge for their youngest clients. So there are only really 3 grades, if you will, of premium based on age. And the last exception is still a fairly open-ended exception. Insurance companies can charge what they want based on tobacco usage. So you'll need to keep that in mind going forward, especially if you find yourself looking for coverage for your family. Deductibles are going to be limited. How much you pay out of pocket are going to be limited. The Affordable Care Act imposes pretty strict limits on what insurance companies can charge in the way of a deductible. They can still impose a deductible. It may even still seem high to you compared to what you might like it to be, but those are limited to protect people and their out-of-pocket costs. Well, the next thing the Affordable Care Act did was it established what it terms essential health benefits. These are certain benefits that a health insurance policy must provide to its insureds. So those of you going out who happen to be shopping for health insurance in the future, you'll be able to go out onto the open market, you'll be able to find a health insurance policy, and you can count on it having certain essential benefits. Some of those have been fairly standard. Certain benefits you won't be seeing a whole lot of changes. However, some policies now will have to have things that they never would have considered before. Things like dental care for kids. That has not been a standard benefit that has been offered by most health insurance policies, and it now has to be part of it. Now, you may be wondering, if you have a group health plan in your local church that you're covering lay staff with, you should have already been contacted by your insurance company, your representative, to talk about the list of essential health benefits, especially if your plan wasn't offering that already. There is a way that you can grandfather in your group plan so that it doesn't have to contain all the essential health benefits. That may save your local church some costs going forward, and it's something that you need to talk to your representative from your health insurance company about for your lay staff. Now we're going to get a little bit more controversial. You probably heard about this in the news. The Affordable Care Act requires individuals to have health insurance. And you may scratch your head and wonder, how can they do that in the United States? Certainly, I can choose whether or not I have health insurance. Well, you still can. This is what's called the individual mandate, and in fact, the Affordable Care Act does mandate that every individual is to have health insurance. However, the penalty for not having health insurance is not a criminal penalty at all. They're not going to haul you off. Instead, what happens is, for those individuals who do not have health insurance, the Affordable Care Act imposes a tax penalty. In fact, this is how the Supreme Court reasoned its way into upholding the Affordable Care Act. Congress has broad powers to tax people, and one of the bases on which they can offer higher taxes is for those folks who don't have health insurance, and that is essentially what has happened. Beginning in 2014, if you don't have health insurance, you will essentially pay 1% of your adjusted gross income, or $96, whichever is higher. You'll see that that's a fairly low dollar amount. The Affordable Care Act does begin to raise the penalties over the course of time, but for the most part, those penalties are fairly low, and they are less than what you would actually, if you had to pay for it and pay for it out of your own pocket, it is less than what health insurance would typically cost on the open market, or in what we will see will be referred to as the exchanges or marketplaces. That's the individual mandate. Getting even more controversial, the Affordable Care Act established new places to shop for health insurance. These were initially called exchanges, and you will sometimes see the word exchanges still used in the paper or on television. However, the Obama administration realized that that word had been painted in a very negative light by the opposing party, and so they decided to change the name. They changed the name from exchanges to marketplaces to make it more palatable for people. Reason for that is that they really need people to sign up on the marketplaces in order for the Affordable Care Act to work. When you go to the marketplace to shop for health insurance, you will find that they have simplified the process. They will have several different policies to choose from, and you need to understand that all of those health insurance policies are provided by private insurers. So the same health insurance companies you have been exposed to through an employer, they will be the same companies that you'll experience in the marketplaces. Those marketplaces are due to come online on October 1st of 2013, so that's this year, and they will be available to purchase insurance beginning January 1st, 2014. So they will be previewed out and rolled out in October and become effective and fully operational in January of this coming year. They will categorize plans. You will be able to choose from plans based on metals: bronze, silver, gold, and platinum. And the coverage is being, various plans are being distinguished based on the value of coverage offered to individuals. So a policy that covers at least 60% of a person's cost for health care is termed a bronze plan. 70% of a person's costs that are covered, a silver plan, 80% gold, and 90% platinum. The coverage that will be offered is yet to be seen. You may have heard in the news this was left to the states. The marketplaces are to be established by each individual state. However, for those states that refuse to comply, a federal exchange or a federal marketplace is going to be established, and we in Missouri live in one of the states most hostile to the Affordable Care Act, and therefore we will not have a state-established exchange. The legislature has refused to create one. In fact, voters voted a referendum a while back which essentially forbid the state of Missouri from establishing an exchange or a marketplace. We do not know what the coverage looks like on the federal marketplaces, and we probably won't until October of this year. Once we do, we'll be giving you more information about that because it will affect some of our clergy families as they go to begin exploring options for family health coverage in the future. You need to understand how this is going to work. The next thing that the Affordable Care Act did was it established a way to help pay for health insurance premiums, at least for certain individuals who fall below a certain income level. The Affordable Care Act created what's called a premium tax credit. Now, if you are looking for health insurance and you don't have affordable care coverage offered elsewhere, you can go to the marketplaces. You have to go to the marketplaces in order to get the tax credit. Go to the marketplaces, and assuming that your income, and that's a special term called modified adjusted gross income. It's essentially your adjusted gross income for income tax purposes with a handful of fairly obscure things put back into it to give you a figure of income called modified adjusted gross income. Assuming yours is less than 400% of the federal poverty level, to give you some idea, these are very round figures, not exact. A family of four, that's about $90,000 a year. For an individual, it's just about $43,000 a year. If your income, your modified adjusted gross income, is less than 400% of the federal poverty level, then you can qualify for a premium tax credit. The premium tax credit is paid in advance. You go to the marketplace. They determine your income level. They determine whether you have affordable care offered elsewhere, and if you qualify, you'll get your tax credit paid in advance by the IRS directly to the marketplace, and you will pay nothing for health insurance. Individuals are not eligible for that premium tax credit if they have affordable coverage offered elsewhere. That typically happens through an employer. What is affordable coverage? Affordable coverage is any health insurance that is offered that costs less than 9.5% of the person's household modified adjusted gross income. So if your health insurance costs you as an individual less than 9.5% of your modified adjusted gross income, you have affordable coverage offered elsewhere and you won't qualify for a premium tax credit. Now we need to talk about clergy for just a minute, especially clergy in the Missouri Annual Conference. Some of you may well feel as though you are paying for health insurance that costs more than 9.5% of your household modified adjusted gross income. However, the law and the regulators have clearly stated now that 9.5% is based solely on the cost of individual coverage for an employee. As clergy, you participate in a program called Health Flex. This is our health insurance provider in the Missouri Annual Conference. Health Flex is administered by the General Board of Pension and Health Benefits. It is, if you compare it to plans that will be coming up on the exchanges, it would be considered a silver to gold plan. It offers very good coverage for our clergy. The premium, you may know, for an individual is $8,760 per year. However, our clergy do not pay that $8,760 per year. Our local churches do. We direct bill local churches, and they cover the entire cost of health insurance for the individual clergy. This means that no matter how much you may be paying for family coverage, our clergy in the United Methodist Church in Missouri will not qualify for a premium tax credit. That applies really just to full-time clergy. Folks who are less than full-time, who aren't participating in Health Flex, may well qualify and probably should explore whether they qualify for the premium tax credit based on what they're paying. But again, it is based on the employee's individual coverage and what they pay out of pocket for health insurance premiums. I'm well aware, we at the annual conference are well aware that our family coverage is more expensive and it is paid out of pocket by our clergy, $12,360 a year. Unfortunately, the cost of family care is not considered under the Affordable Care Act. They need to know that was a decision made by the regulators in Washington and not by the Missouri Annual Conference. Personally, I would more than welcome you to be able to go to the exchange and get the premium tax credit, but at least in 2014, that will not be the case. The next thing the Affordable Care Act did, and this gets even more controversial, is that the Affordable Care Act mandates that employers play or pay. This is called the play or pay rule, also called the employer mandate. This has been controversial in recent months because the administration decided to delay the imposition of these regulations until 2015. Two pieces of good news. The employer mandate only affects employers who have more than 50 full-time equivalent employees. For the vast majority of our churches, that is not the case. They have fewer than 50. There are a small number of large churches in Missouri that will fall to the employer mandate should it come into enforcement in 2015. The other thing you need to understand about the employer mandate is that it mandates that employers provide affordable coverage or receive a penalty, a tax penalty. Employers have to provide affordable coverage, and remember the definition of affordable coverage is 9.5% of a household's modified adjusted gross income. There's some issues with this. How do employers know what an employee's household modified adjusted gross income is? Well, they cannot. It is impossible. Instead, what an employer must do is base the cost of individual health insurance premiums that it charges to its employees. It must base that on the employee's individual income. Doing that is the only safe harbor for an employer. They can look at how much they're paying their employees and base the cost of their health insurance on that, and they will be safe in doing that. And also remember, it is only the cost of the individual's health insurance that is considered. So coverage that costs, as long as an employer is covering every employee at no more than 9.5% of his or her modified adjusted gross income, the employer is going to be safe from the employer mandate. That said, you also need to understand what the penalties really are. Employers that don't comply, employers that either offer no health insurance coverage or offer coverage that's more expensive, if only one of their employees goes to the marketplace, obtains health insurance, and qualifies for a premium tax credit, that employer will be charged a penalty. And the penalty is equal to about $2,000 per employee for every employee, even if only one obtained the premium tax credit. The employer will have to pay $2,000 for every person who works there. So you can see immediately what this does. $2,000 per employee is probably less than what an employer would actually have to pay to cover their employees' health insurance premiums. That means the thought in Washington was that employers might choose to simply pay the penalties and no longer offer coverage and send all of their workforce to the exchanges for health insurance. Again, the pressure is to put people into the exchanges. They need this to happen. The government needs this to happen because more people in the exchanges means that more people will be on those plans. More people on those plans mean that healthier people will be on those plans. The healthier the people, the younger the people, the less expensive it actually costs to insure them. Healthy people don't have a lot in the way of doctor's bills in the course of a year. The same with younger people. They tend to have fewer doctor's bills, fewer prescription drugs than older folks. It is in the government's best interest to get as many young folks and healthy people into the exchanges or the marketplaces as they possibly can, because it will hold down the cost of premiums for the coverage offered on the exchanges going forward. The last thing that the Affordable Care Act did was it created a series of miscellaneous costs and benefits. Some of you may have been taking advantage of what was called the Small Business Tax Credit. Small Business Tax Credit was a tax credit offered to small employers with fewer than 25 employees, and it was a tax benefit that offset their payroll tax. Our churches pay payroll tax, even though they don't necessarily pay income tax as tax-exempt entities. They would be able to get an offset to their payroll tax through the Small Business Tax Credit for the amount they paid in premiums for their staff. Now for us, remember, clergy participate in Health Flex, and that is administered through the annual conference and the General Board of Pension and Health Benefits. But for lay staff, many of our churches provide coverage, and until this year, they've been able, for the last 3 years, to get a small business tax credit to help offset the amount they pay in payroll taxes. I know of one church for which it saved about $5,000. Which is no small amount of money for a mid-sized to small congregation. Well, beginning January 1st, 2014, the Small Business Tax Credit will not be available to churches or small employers unless they shop for health insurance through one of the government-established marketplaces. And you need to understand that in addition to the individual marketplaces, the Affordable Care Act also created employer marketplaces. Marketplaces for small employers to shop for coverage for their staff. They call these SHOP, S-H-O-P marketplaces or exchanges. Once those come online, it would be in the best interest of many of our small to mid-sized churches to go shopping and see what sort of coverage they can get for lay staff, especially if they're able to continue to receive a small business tax credit. I would encourage all of our local churches with lay staff that are being covered to at least explore that option, but to be very cautious. I will say this again in a few moments about our individual clergy families. We need to be very cautious when we go to the marketplaces to shop for health insurance. Currently, especially in Missouri, we don't know what the premium structure is going to be. We don't know how much is going to actually be charged for these health insurance policies. We also don't know the quality of care that will be offered through them. The rumor, what we're hearing out of Washington and in the press, is that the coverage is going to be less than what most people are accustomed to having. So you need to ask yourself, as a local church leader, very carefully whether that's something you want to explore for your lay staff. My personal opinion is that every local church who might get a small business tax credit ought to at least explore it come October when the exchanges come online. See what is available, see how the coverage looks, see how it will be for lay staff, and see what sort of cost savings you can have for the local church. Another thing that you may have heard about is the Medicare Part D donut hole. This has to do with prescription drug benefits that is offered through Medicare. The Affordable Care Act is, over time, closing the donut hole, and this will help out many of our retirees. Some of you will remember when we changed our retiree health coverage a few years ago, one of the objections was that many of our retirees found themselves trapped in the donut hole for prescription coverage. This is essentially a place where a person who has certain amount of prescription drugs ceases to receive coverage until they get up to a certain level of cost. In other words, it increases their out-of-pocket for prescription drugs. Well, that hole in coverage is going to be closed over the course of time. Finally, and this does affect clergy as well, the Affordable Care Act reduced the amount that you could contribute to a flexible spending account. You will see a change to your pastoral support form that is a very simple change. It simply adds a note to one of our lines that indicates that you're not allowed to contribute any more than $2,500 per year to that flexible spending account. So that sort of covers what's happening with healthcare reform, and I know that's a lot of information to digest. I encourage you to take a look at the PowerPoints and see what you can find out in the media to read to make sense of this. You can always call me or email me with questions as well. The next question is really the important one, however, and the question is, what do we do about it? Let me take pastors first. First of all, I've already said this. We require pastors to participate in HealthFlex, and that's direct bill to churches. The $8,760 per year charged for individual clergy is completely covered by your local churches. You need to also understand, in the spirit of transparency, we announced at annual conference that there was not going to be any increase to the premium charged by HealthFlex, and that is true to an extent. Local churches for 2014 will not see an increase in the health insurance premium. There was, however, through the General Board of Pension and Health Benefits, an increase. The increase was about 5%. However, because of HealthFlex and participating in that program, because it's administered by the General Board of Pension and Health Benefits, one of our church agencies, they are not seeking to make money, because generally all of the clergy across the denomination that participate in HealthFlex, and that is not every annual conference, because we had less money paid out in claims than we paid in premiums, the General Board refunded about $15 million total back to the annual conferences participating. For us, that was a sizable dividend that we received. It was not $15 million. That was for every annual conference. We received a portion of that. And we turned around and we put that back into the program so that we could offset the 5% increase in health insurance premiums. A few years ago, you will remember that the premium for HealthFlex increased significantly, about 17% in 1 year, and it was painful to lots of our churches. Clergy felt the pressure from their lay leadership, and lay leadership just felt the pressure from an increase in costs, and we did not want that to happen again this year. And so we were able to help out local churches by offsetting the increase. So you in the local church will not see an increase in health insurance premiums, and we will be evaluating that very carefully going forward. We may have enough from those dividends to do that again in the future, but I also can't promise that an increase in premium is not going to occur, especially in the current climate. You will have heard in the media that premiums are tending to go up in light of healthcare reform, not down. And we are going to watch that very carefully so that we can make a decision about our future with HealthFlex and our future with respect to the Affordable Care Act going forward in the future. The next thing I need to talk about is family coverage, and I'd like to do this with an example. You heard me indicate that our clergy will not be eligible to receive the premium tax credit, and I want to illustrate for you exactly why that is and how our pastors ought to be handling health insurance, especially those who have families and for whom they do not have a spouse that works. Let's take a clergy person, a hypothetical clergy person, and we'll call him Reverend Jim. And let's say Reverend Jim is appointed to a church in Missouri, and he receives his modified adjusted gross income on his taxes is about $45,000 a year. Let's suppose he has a parsonage, he is married, and has 2 kids. Let's also assume that Reverend Jim has a wife who works, but she's part-time. And let's suppose that she does very well as a part-time employee and she receives $40,000 as her own modified adjusted gross income. That is not unheard of for folks in the healthcare field or for part-time attorneys or occasionally even folks working part-time in school districts. They make a good wage doing that, but they typically are not offered benefits as part of their package. So Reverend Jim has a total household modified adjusted gross income of about $85,000 per year. Well, what are his options? First, remember, Reverend Jim is covered by HealthFlex. His local church is direct billed $8,760, and he is fully covered under HealthFlex. His coverage is paid for at $0 to him personally. Therefore, by definition, Reverend Jim has affordable care offered to him by his employer, the local church. What are his options for his family? Well, there is HealthFlex. The HealthFlex premium for family coverage for 2014 is $12,360, regardless of how many children you have. The more children, the more value you get out of HealthFlex. We know that $12,360 a year to cover a family is expensive. And unfortunately, because Jim is offered affordable care at $0 to him for his individual coverage, he is not able to go to the exchange, locate coverage for his family, and receive a premium tax credit, even though his family of 4 falls below the $90,000 a year that would be the limit at 400% of the federal poverty level. Reverend Jim receives coverage at less than 9.5% of his modified adjusted gross income because it costs him nothing for his individual care. So option 1 is to pay for HealthFlex out of pocket, $12,360. Option 2 is to go to the exchange, but understanding that whatever plan is purchased, it will not be paid for with a premium tax credit. It will be out of that family's pocket. This is a situation that we know can be difficult for lots of our clergy, and I want to express to you that I understand that, and I even have some regret that the regulators shaped the law the way they did. I wish that more of our families were going to be able to receive the subsidy from the government, the premium tax credit going forward, but at least for this year that is not going to be the case. So Jim's options are 2. Pay for HealthFlex or go to the marketplace. Going to the marketplace, he should explore both options. Unfortunately, going to the marketplace is a risky endeavor. We don't know what the coverage is going to look like. We don't know how much the actual cost of that coverage is going to be, what the value is going to be, even though the marketplace is going to categorize it. Reverend Jim will need, in order to match the same sort of coverage offered through HealthFlex, he'll need to look at the silver or gold plans, but he needs to remember lower premiums mean lower coverage. He also needs to take a tax consideration into account. The $12,360 he would pay to HealthFlex can be deducted by his local church from his cash compensation. By doing this, it means that he can pay for those health insurance premiums before tax. They won't be charged taxed. As clergy, that will save him about 30% of the $12,360. So he'll need to take that into account because the coverage purchased on the marketplace will be out of pocket. It will not be deducted from his paycheck, and therefore it will be taxable both for income tax purposes and for self-employment. For even our lowest paid clergy, that will be a tax rate of about 30% he'll be paying on the premiums offered to the marketplace. So I say all this to just urge caution. Every clergy person who falls into this, who has a family for whom a spouse does not work and there is not affordable care offered elsewhere for their children and their spouse, need to consider the marketplaces, the exchanges that will be set up in October. But they just need to be cautious when they go there to shop and understand that even though the Health Flex premium seems expensive, the tax benefit that you receive for those premiums offsets the cost a great deal, even though you may not feel it coming out of your paycheck when it happens. The last thing that I want to talk about is, what do churches need to do? Well, churches need to do three basic things. First of all, they need to get ready for 2015. That's a long way off, and I'm glad it's a long way off. I was worried that I was going to have to tell you to get ready for this in 2014. But because of the employer mandate, the mandate that requires that every employer provide affordable coverage or pay a penalty, every employer, including our local churches, will have to provide notice to its employees of what the actuarial value of their health benefit is that they're offered through the employer. That's going to be a change in the way local churches report to employees on their W-2. It's also going to mean reporting to the Department of Treasury about how many employees you have and what sort of coverage is offered. But none of that is now going to come into effect until 2015. And so you just need to be prepared and be thinking about that and be watching and waiting for more guidance from my office or from the Department of Labor or the IRS going forward. Local churches that have lay staff need to consider going to the shop marketplaces and applying for the small business tax credit. Again, this is something that should not be done without a lot of care and a lot of thought. Local churches need to go shopping on the marketplace to look for their health insurance coverage. They'll go to the shop marketplaces and they need to do a comparison, just like we talked about Reverend Jim doing a comparison. How much are you really saving by going to the marketplace? And what is the value of offering your employees something that you've already been offering them and making sure that they have very good coverage? Finally, and this applies to everyone, every local church has to give notice of the marketplaces no later than October 1st. You may ask, we don't have any employees. You actually do. You have at least one, the pastor, and you as the pastor may be the one watching this video. Your local church has to provide a notice to you in writing of the creation of the marketplaces by October 1st of 2013. That notice needs to be given. It is in letter form, and I have forms available, templates for you to use, produced by our General Board of Pension and Health Benefits. They're available on the website. You can find them by clicking on the template for notice of marketplaces. You need to modify that enough so that you are able to inform your staff of what they actually have. And whether or not they are already covered and offered affordable care. Many of our local churches with lay staff provide their health insurance benefit at no cost to the employee, in which case those employees will not be eligible to receive a premium tax credit. Whatever your situation, you have to give the notice. To whom do you have to give it? Every employee, full or part-time. Doesn't matter if they only worked 15 hours a week, they get the notice. You will also have to give it to every new employee you take on over the next several months. Again, there are both instructions and a template for you to follow. You don't have to give it to independent contractors. However, you need to be very cautious in making that distinction. Many of our churches treat their nursery workers as independent contractors. They give them what's called a 1099 instead of a W-2 for tax reporting purposes. But the IRS has a very strict test for who's an independent contractor and who's not. And one of the tests is whether the individual brings his or her own materials to the job site to do the work. So if you're providing a nursery with diapers and toys and everything else already there for the nursery worker, the chances are that nursery worker is really an employee. Regardless of whether you're giving them a 1099 or a W-2, go ahead and give them the latter. Make sure that you cover your bases. We don't know what the penalty is going to be for not complying with this requirement, but we don't want to find out. All of the advice I'm getting from the General Board of Pension and Health Benefits is simply to give a notice to everyone, regardless of their status. Now, you won't give it to someone like the lawnmower if you use a lawn service, or if you have somebody who comes in, brings their own lawnmower, and you simply give them a 1099. You don't have to give them a notice, but everybody who might be qualified as an employee needs to get one, and I would cast the net broadly just to be safe. Well, to end, I just want to say, I know this is confusing. I know that we are moving into a new paradigm. Most of the policymakers in Washington, for all of the arguing of politicians, most of the policymakers are in agreement that our old system by which employers provided health insurance does not work and is not sustainable. There will be a change to the way we provide health insurance for people. Here at the Missouri Annual Conference, we're committed to taking care of our clergy and also making sure that our local churches are able to afford what they're doing so that they stay viable in their ministries. We do not want something like health insurance to cost a local church or a pastor its ministry. This is very important to me personally, and I want to make sure that we're providing all the support we can during this time of transition. It's not likely to be a fast transition. Already the Affordable Care Act has come under attack, and already delays have been made to its imposition, and we just will continue to watch and see what happens going forward. For now, clergy, remember, we will continue to keep you and require you to participate in Health Flex, at least full-time clergy. For family coverage, you'll want to check out the individual marketplaces and see what you can do for your family coverage if your spouse doesn't work and doesn't have coverage offered elsewhere. Churches want to check out what they can offer for their lay staff. As you go about all of this, if you have any questions, I encourage you to contact me. My email address is inberneking@moumethodist.org. You can also contact Trudy McManus, our benefits coordinator, at tmcmanus@moumethodist.org. We look forward to assisting you. We are praying for you in your ministries. We're very excited to see what the future holds, and we want you to know that we fully support you in all you do and offer you thanks for your ministry. Thanks, and I look forward to talking to you in the future.